All right, we're in the middle range right now. Nothing to do. If you were looking at the rolling 1 hour, 1, 2, 3, 4. Yeah, I mean you had a rolling 1 hour liquidity window right here. 1, 2, 3, 4 to this high. Which was taken out. Okay. Now we're getting somewhere. What do we need? On the 1 minute chart, yeah, see, this is the thing. Waiting when you're trading off that 1 minute chart in the first 90 minutes. We need this is your order block here. Now, I don't know if there was a setup on the 15 second to go long after we took out this here, rolling 1 hour sell side. And then here's your buy side up here, just of the past hour, right? We might. Yeah, we do. I'm sure there was a trade there. If we go down to the 15 second. Yeah, there you go. There it is right there. We took out rolling 1 hour south side. Got a pivot high here. Goodness, I don't know what is wrong with me this morning. Come on. There we go. Market structure shift. Pivot high, right? That was your long right there. And we're in the macro too. What happened to macros? Oh my gosh, what happened to my charts here? So here's your macro. Well, 945 to 1015. We're still inside the macro. But that's the beginning of the macro. Or 950 actually, technically. So that was a long. And then if you again go back, you get 1, 2, 3, 4. Hold on a minute. 1, 2, 3, 4. There we go. There's our high. Go back to the 1 minute to find the rejection block. Or you can use IPDA if you wanted to. Might be easier just use IPDA. I would use the whole bar down to the close. So that would be your 1 hour, or your rolling 1 hour liquidity window rejection block, a bearish rejection block at the highs, right? But if you use IPDA, real quick, let me draw these in here first. It's good to have these both on there, right? Or you could just use IPDA. You can't go wrong using IPDA. It's easier. You don't have to, it's less. You just draw it on the manipulation leg and you're done. Let me just put this in here. See where everything falls. Yeah, we didn't get even 75. I noticed that. I mean, it's like in the mornings, if you are going to trade it off that 15 second, man, I would just scalp, right? So where would your IPDA be? Off the manipulation leg. That's it. It's that simple. Draw on a manipulation leg. There's your targets on the way up, right? So if you're long in here, instead of waiting, if you wait for it to pull back market structure shift, you never got in the trade, unless it's doing it now. Oh man, we still didn't hit it. But if you use IPDA on the 15-second chart off the manipulation leg, there's your 2 and 2.5, and look where we paused. I mean, here's the thing. Sometimes these mornings are choppy, right? I would just use that 15-second Use the 1 minute to frame it, and then use the 15-second for the entry, and then you just use the IPDA, because you have to approach it differently. You honestly, if you're going to trade in here, you have to approach it differently. Use your 1 minute to frame the trade, 15-second for your entry, and just do everything off the 15-second at that point, and just use IPDA. I mean, you can't, and just save the bigger targets for outside of this, especially as choppy as the market is and has been this month. Now, are we going to, question here is, we've traded back into this 15-second breaker. Are we going to bounce here? Breaker. Let's go back to the 1. What we could do, that's a 15-second breaker, right? If we get a propulsion block, you've got a 1 minute bearish order block here. Bullish. Right? Down close candle, fair value gap. If this down close candle, which tapped into this order block and 15-second breaker, if this confirms as an order block, we get a retest of it, we'll trade it. Okay. We might have, this may be a propulsion block. We'll know here in a little bit. All right. So let's set this up. I'm on a different screen, so I'm going to do this. What the heck? Come on, man. Jeez. There we go. MES. Shoot. Sorry, guys. All right. Let's see where this closes, but I mean, I got displacement. So this is likely a propulsion block here. And I'm just going to identify this right there. We still have about, either way, I mean, if this isn't a fair value gap, it's an implied fair value gap, right? So where is that over here? That's this one. All in. If it pulls back and retests that,
order submitted,
we will take the trade. If it comes back in here, stop at this low. Because this is a parent order block. We need it for it. We need the market to pull back. All right. Makes sense? So you got parent, child, and you got a 15-second breaker in there too. It was right after market structure shift. So all the makings of a good trade. Breaker. Notice they're overlapping. Propulsion block, order block, overlaps a breaker. Now you could, this closed above, you could do half there and then the rest and the retest. Draw on liquidity is this high up here. Let's draw our Fibonacci's in there. Looks like we're pulling back. We'll draw it on the confirmation leg. And we'll take off the first one at 41.25. If it pulls back, I probably should have done half position on the IPDA. Yeah. Dang it. You could always do half position when the propulsion block confirms. Well, actually, right there, for example, and then add to it on the retest. Let me show you what that looks like.
Order canceled.
Where did it confirm at? Right there.
Order submitted.
And then if it pulls back, if we get lucky and it pulls back here, and we get filled, and then we'll scale in on the retest. Our average price is a little bit higher, but it's what? It's not that much. You got a fair value gap sitting right there too. All right, so now we can just bring this up to the retest.
Order filled.
There. We'll put this, bring this down. All right, now let's see if the propulsion block does its job. First target, where's our confirmation leg? Right there. No. All right, we'll use this. What was our original draw? Is this high? Okay. There. And there. All right, let's see if we get any follow through on this. That seems awfully spread out. $35. 35, 75, 41. I mean, you could take your first part there and then 1.5 and then 2. That would be the majority of the trade. That would line up with our original rolling 1 hour liquidity window. Do that. Because then we'd be out and there's rejection, the rejection block right there. So that would line up with our rolling 1 hour liquidity window. What? There's the trade setup. Make sense? Any questions on that? You got the order block here. You got an order block here. Notice they're nested together. And you also have a breaker on the smaller time frame right in here. Pretty much right through here. So if this is a you know, if this is a true market structure shift, then this should hold. And you've got low resistance liquidity run. All, you know, all of this, right? So we'll see. You got SMT, bullish divergence with the NASDAQ. Let's look at it. Here. Sweeping London low. You might need to wait. We need this to reverse here. The NASDAQ, we need to see that reverse. If that doesn't reverse, then let's look at the Dow. Dow looks good. It's up near the highs. Trying to break back inside last week's range. So it's going to depend on what happens with the NASDAQ. I'll be looking for a reversal in the NASDAQ here. If we can get a reversal in NASDAQ here, then we'll probably see this S&P trade higher. What we need is that to be broken on the NASDAQ. Right? Here's the bearish order block on the NASDAQ that needs to break. Come on, get back up through that 50%. This, oh, goodness gracious. There's our new fib. What did I just do? Oh, I got fibs on top of fibs over here. I don't know what that was. There we go. We're looking for a market structure shift here on the NASDAQ. We don't have it. We've got it in the S&P, but we don't have it in the NASDAQ. Okay. All right, let's go. Bye, 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 as Jim Kimmer says. Looking for a confirmed market structure shift here on the NASDAQ. That should help drive our S&P higher. The notice the market is holding that 50% level, mean threshold of the propulsion block. That's what you want to see. Targets are based off of IPDA, it's standard deviations. Now, if this NASDAQ runs higher and this S&P just lags, I'm going to be really irritated. I don't think it will, but I mean, we got a solid entry here. But I didn't think it was I didn't think it'd be the same thing the other day either. So it doesn't matter what I think. Okay, we got to confirm market structure shift on the NASDAQ. So let's see now if, well, I mean, it's a mitigation block. It's not as strong as a reversal as this is. This is actually a mitigation block, not a breaker. The breaker is actually higher on the NASDAQ. Shoot, I just realized that. Here's your breaker up here. Well, order block. So we got to get through this one. We got to get through that one.
Target filled.
There's first target. Oh, so I was in with 4. I didn't realize that. I thought I was in with 3. Oh yeah, 2 and 2. Okay. Oh, that ended up working out better. Okay, so hold on a minute. Oh, so that's why it was off. Okay, so I actually needed to cover 211.
Target filled.
So I should be 211. All right, there we go. So I thought something was off because I had an extra a trade up there. So actually, yeah. All right, so when I do 4 contracts, I do 211. No one caught that. You guys didn't catch that. If you're trading NASDAQ, if you traded the market, if you traded this off the mitigation block, that's fine. I mean, you already have it. You already have the market structure shift on the S&P. So, and it's a propulsion block, right? If you're trading the market structure shift here, you're long right there. If you're looking for, you've got an order block here, right? Or you just go to that there. There's an order block. Oh, I don't know. I don't think we tapped into it. And then yeah, we didn't have that confirmation that we tapped into it, but you do have a propulsion block way down here, but we didn't tap into it yet. I like the propulsion blocks, man. Let's see how the rest of this plays out. Second target is 48.5 and then 55.75 and a third target, which is just inside our original rejection block. So that's perfect. And just inside opposing buy side. You know, this swing high. The opening range. No. That's eight. That's before the opening. That's that swing high before the opening bell. There's your opening bell there. Any questions on anything? All good? Who's anybody in this? What was your risk over here? Oh yeah, see the one contract on the NASDAQ. NASDAQ, you might want to look for propulsion blocks and just trade those because of the volatility, you know, this time of day. Overnight in Asia, it's fine. Mornings, the volatility, you know, risking only $250 per trade. You have to risk more to trade more contracts on the NASDAQ. Tapping into the opening range high is right there. That's what getting a little bit of resistance. So we can push through that.
Target filled.
There's our second target. Okay, so now let's manage this. We got potentially fair value gap there, fair value gap, order block. Okay, so we can move this up. Let's go there. All right, let me explain why there. You got fair value gap here, fair value gap there, order block there. And this is an implied fair value gap. You might even have a little one in there. Yeah, there's a little fair value gap right there as well. Just a little tiny one, right? So this is bar number one. So we get another fair value gap here. We'll have 1, 2, 3. We go to the low of the order block. You guys in with me? That's that propulsion block, like I was just saying earlier, market structure shift, propulsion block, and an order block all nested together. It's a great trade. I mean, it's like A++ trade, really. So you have market structure shift here. So, I mean, technically, you can really see it on the 15-second. It's not a pivot high on the one, but on the 15-second it is, or even a 30-second, right? Let's look at it. Let's go down even 30 seconds. Yeah. See pivot high. So you have your order block, your parent, and then again, we went back to the 1. So we kind of used the 1 and 15-second for this trade, right? To frame it. But you got your parent order block on the 1 here. Bullish order block, right? Why is that a bullish order block? Get down close candle, sell side delivery before the spike higher, right? Before the impulse or buy side delivery higher. Then the market pulls back into it, and right here, right? And you get another move higher, right? So we've got institutional sponsorship here. Fair value gap. Fair value gap. Coming out of the order block, right? So then when it pulls back into this, you hit it. Draw your Fibonacci's on the confirmation leg. Or you could use the pullback leg, but I mean, the confirmation leg, in this case, it makes sense to use the confirmation leg. Your pullback leg into it is smaller. You could do that if you want tighter targets, right? I used the confirmation leg, took off at 41.5, looking at what, 49? I don't know. It's off by a little bit. I don't know why, but that's okay. Must be just difference in data or something. 56.25, 55. I don't know why it's off, but maybe I'm off. Maybe I drew it in the wrong spot. Over here. I can't select it. Oh, I'm off by a tick. That's what happened. There we go. I was off by a tick. Okay. So let's put this up. There. If you did it off the pullback leg, you're not going to use this for your stop, obviously, right? Well, now I guess you could. I mean, it ran up through this high. You could now if you wanted to. If you really wanted, well, now we've got it even tighter than that. Actually, we need to move it up, don't we? You got 1, 2, 3. Yeah. Okay. So we can go there. The only thing is I look at this right here as a liquidity pool. And if the market goes, sometimes it'll come all the way back, grab that liquidity and then take off. And then you're out, right? And then if you just held back a little bit more, I don't like going right to the low of the order block just in case. I like that better. That gives a little bit more room. Now, if it pushes higher now and takes out this high, then I have another order block up in here, that would change everything. Because then it's likely we just sweep, if you do pull back, we just sweep the liquidity resting below this low if we push a new high. But look, if you use the pullback leg, you'd probably be out actually if you covered there, there, and there. I think we just hit the rejection block, didn't we? Oh, no, not yet. But if you're scalping, you can do that, right? Your reward to risk initially is upside down, but if your winning percentage is if you can maintain at 65, 70%, like we're doing right now, in pre-market and during RTH. Now, during RTH is probably a little bit lower, but if you factor in pre-market trades, it's, you're around 65, 66%, I think it is. Sometimes it's more than that. Just, it changes. If we go to the journal, you can look and see this. It's month to month in here. So here, let's put this over here. Like August performance. It's updated. I don't have it updated every day. I just update it at the end of the week. Well, no, sorry, winning percentage. See, we're only at 50% in August. July, 62. June, 70. Good month. May, 71. April, 57. Yeah, it's because we're all-time highs. It was the first couple weeks of April. You see a chop. We stagnated. That's why you have to trade also outside of RTH, in my opinion. At least I do. I can't just trade during RTH. I have to find trades pre-market or even Asia. Look at, okay, let me show you this Asia trade on the NASDAQ. Right there. Asia last night, we took out the prior day low is sitting here as well. That might be this one here. We took out the prior day low. Yeah, this is the prior day low. We took that out. And I think on the S&P we're at DRT levels. I don't know why they're not showing up over here. Why aren't these showing up? 559. Oh, they're up here. They're up here. You could have actually looked at this. This is a mitigation block, right? So similar trade to what we did here. We called the market structure shift off the mitigation block because we swept a significant liquidity pool, right? This is the prior day low here. So that was a significant liquidity pool. And there's your market structure shift. So technically, you can wait for it to market to pull back into it right there. Stop at the low. 2 contracts. Or you can even, since that, I mean, you could even use this low. You're still at 2 contracts. And then you can use the 1 hour, the prior 1 hour, which was 1, 2, 3, 4, which is this high here. Is the rejection block. Or use IPDA. What? 75 and 100. First target there. And then your second target would be the rejection block, discount level of rejection block with a stop at this low. This is a protected low. You can use that. That was last night. If you used IPDA, you can use it just on this pullback. 1.5 and 2, similar. All right, so we're tapping into this. I don't know if we're going to come back all the way down and tap into this or not. Let's look at this was the trade on the NASDAQ last night, Asia. Between 8 and 9 is a good time to look, or even 7:45. Between 7:45 and 9 is a good time to look for Asia trades. Let's look at what's going on over here. We're just pulling back, also rebalancing this fair value gap here. See if we can respect that. Market's trying to tap into yesterday's and last week's range. Any questions on anything? All right, push up through there. Get some AMD action going on here. Accumulation, manipulation, lower. Sweep the liquidity resting below this low and take off. That would be nice. Or are we going to see a market structure shift here? I mean, you could jam it up there because this is either a market structure shift or it's manipulation followed by distribution higher. Or it could just end up pulling back into the order block, which would be a short-term market structure shift, right? So it just depends on how much room you want to give it. What was our other? 48.5. Want to wait? Come on. Push, 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 push. Where's our likely draw on the NASDAQ? This high here. Let's go back. I lost my S&P chart. There. Let's step out. Oh yeah, this high. Where's our target? 56.25. Oh, it's right at the midpoint of that rejection block. Well, I mean, if the market that looks, I mean, this has got to be our draw, right? One hour buy side. Now let's move that stop up. We just took out these highs. So we swept this liquidity. Now we could go up to here, right? But let's just count here what we got. We got a fair value gap here. I've got an order block here and a fair value gap there. They're nested, but I don't care, right? At this point, I mean, we're getting closer and closer to that third target. So I could go here, or I could go right to there. But what I really wanted to jam things up, I got 1, 2, and this for value gap. I know they're nested, but I don't care, right? At this point, we're getting closer and closer to that target. You could, I mean, as you get closer and closer to the target, you could really tighten things up. I know some traders do that. Might have a volume imbalance right there. We'll see.
Target.
There we
filled.
go. Nice trade, guys. Propulsion block. I'm telling you that propulsion block, when you got those 3 together, that's A++, man.